Cleveland and everyone from everywhere else. Welcome to your 10-minute TA for the day. Let's dive right into the charts. Okay. So, we went a little bit lower from yesterday. How much lower? Well, we made it down to the measured move of this bear flag from the 6-hour chart. Yep, made it all the way down to that measured move, pretty much exactly to it. And you'll also notice that the 200-day moving average here on the daily chart is hanging out right around here. We'll actually do it this way. So if I put the cursor over top of yesterday, you'll see that right underneath the where it says Bitcoin US dollar, there's a little L, and then it says 81923.53. That's the lowest that candle got. And then right below that, you'll see that purple number. That purple number is the 200-day moving average. And you'll see that it says 81761.07. So basically, price action came within $150 of the 200-day moving average and then found a bounce. Now, that could be a good sign. Could be a good sign. We're going to adjust our bull flag here on the daily. Adjust our measured move down as well. The measured move is only up to 120 now. But it's still there. The bull flag is still there. It won't really be invalidated until we lose that 786 as support. The 7722. I'm going to change that to just 77. There we go. Okay. So yeah, so what are we seeing for today? This, like, we're the bigger time frame here. Yeah. Oh, I wanted to show you one more thing. Well, I'll show it to you in a minute. But okay, what are we seeing for today? Let's go to the 90-minute chart to check that out. So our bear flag here, it didn't quite hit out, but it needs adjusting now. So we'll move our upper bound out. We moved our lower bound down. We're gonna move our fib retracement a little bit over as well. Kind of fell out of it. Should bring it down to here. And there's our new fib retracement as well. Okay. Okay, so what are we seeing now today? Well, we're still in this bear flag. The bear flag will now play out to as low as 74,000. Ouch. That would be a big ouch, but hey, it's on the table. This bear flag is here, so we got to prepare for it. We got to be ready. I've been taking some heavy profits off of my alts. And at this point, it's not even heavy profits because they're basically back to, some of them are back to the levels where I was buying them. So I just really took money off the table just in case we're going lower. If we go higher, I left some on the table. But in case we drop much lower, or if this really is the end of the bull run, then I, have money on the sidelines. I can pull out at a loss on some of those other positions, still be up overall, and wait for the bear market to really take hold for me to start buying back in, But I might be getting a little too pessimistic here. Again, like I say every day, I don't know where the market's going. All I can do is look at the charts and give you some probabilities, show you what they're showing me, and prepare for either direction. Are we seeing any bullishness? Well, a little bit, just a little bit. So if this level can hold, this key level, this right around this 85, I know price action is under it right now, but it's still putting in this higher low here. Well, if it can stay here, we could carve out a right shoulder there. Let's move this down a little bit. So we would have a wonky left shoulder, right shoulder, or head and right shoulder. Now it needs to stay here. If this, and it kind of looks like it's already breaking down as I'm talking about it, but if it can find support right here and come back up, carve out that right shoulder, we could see it come back up to the top of this channel, and then they have a chance to break up higher. However, it does look like it's coming down. So instead of that double or inverted head and shoulders, we could possibly see a double bottom here at the 82 major support level there. Now, if that double bottom comes in, again, that would play right back up to the top of the channel. That wouldn't invalidate this bear flag. The bear flag would still be there, but we could maybe move to a more conservative measured move up to like here around 79.4. But until that happens, we're watching for a lower low to come in. If we lose this 82, well, then we got some trouble, and that's what brings me back to the daily. I wanted to show you a new indicator. Well, not a new indicator, but one that I haven't shown you before. It's called the visible range volume profile. So what this does is it takes everything that it can see here. We'll make this bigger. Come on, there you go. It takes everything that it can see here, and it gives us a volume profile. The blues are buys, the yellows are sells, but really what we look for is these gaps. So you'll notice that right around here, we have this gap, like low liquidity. Now, a lot of it, there's really not a lot of selling pressure there. There's a lot of buying pressure there, but that's because we only moved up through here. But the gap means that we'll easily fall back through if we lose these positions. So if 82 fails, well, then we have a gap all the way down to 77, which is that measured move of the, 90-minute bear flag that we've been talking about over here. Not back to that way. There you go. Yep, that would be the measured move down there. Actually, a little bit lower even from the bottom. There, if it was coming in from like 86. But regardless, back to the daily real quick. With that gap there, we got to be real careful. That's why I was taking profits off some of those alts, because with this gap here, we got to be real careful. Because we could fall all the way down to as low as like 73.5 here. That's where liquidity really starts coming back in, down here around 73. Now, if we get there, that's like our old all-time highs from back here in last year's all-time highs, last year's highs. But yeah, that would be a pretty bearish sign at that point, because at that point we're gonna have to say, hey, bear market might actually be here, unless it's some major manipulation going on. Anyway, let's just let's smoke the hopium. Let's hope that this double bottom or this inverted head and shoulders takes off, and we can see a move back up to this 200-day moving average on the 90-minute chart, up at 94.5, get up over 94, get over that 200, and then we can start being a little more bullish again. Because as long as we're under the 200 here, we got to be a little more bearish. We're under the 200 here as well, and we're close to the 200 on the daily. So we got to be, a little more bearish on these short-term time frames. However, we are seeing the 21, this big red line. The 21 is far away from price action on both the 6-hour and the daily chart. So with that being the case, perhaps these little bullish signals can take hold, and perhaps we can see a move back up to the 91,000 range. And if we can break over that 21 here, then a move back up to the 200 up here at 98 is the move. Now, hopefully that happens. Hopefully, if we see that, then we could say a V-shaped recovery. It would take maybe a few more days, the rest of the week. But if we're seeing more bearishness, then fuck, we're going down to 77. Sorry for swearing. But yep, we need this key level to hold, this 85 here, or this 82, this range here. We need it to hold. We need it to hold hard. That would also be a bounce off the 618 Fibonacci retracement, which is a pretty common bounce point. So there are a few bullish, there are a few bullish signals coming through, but the bearish signals are also very, very strong. Be careful out there, y'all. One more time, I'm going to tell you. I can't tell you where it's going, and no one can. So if you're watching is saying, oh, we're definitely going to bounce from here. We're going back up to 100. We're going to 150. Well, I wouldn't listen to them. Because just like last time around in 2021, everyone was calling for 100K. We started seeing it, dip down from 69 back down to 60 into the 50s. And everyone's saying, no, it's coming back up. It's coming back up. Got down to the 30s, did come back up, touched 69 again. Everyone's like, it's going to 100. And then where did it go? Down to 15. Bear market took hold and we went down to 15. Slightly under, about 25% under the previous all-time high. Well, if we go to the previous all-time high, which was about, 69K? Let's make this a little bigger. Sorry for going long. But previous all-time high is 69K. Let's say we go a quarter lower than that in the bear market. We're looking at a price dump that could take us down to the 50s, maybe a little bit lower into the 40s during the bear market. So be prepared, guys. This could be a long winter. Could be a long winter. But hey, I could be completely wrong. I hope I'm completely wrong on that bearish scenario. And I hope that the bulls can take control from here. The key level holds. And we just see more upside. We see more of this, more of this bullishness take hold. Hopefully 120 coming in. Let's see what happens. Hold 85, hold. Thanks so much for watching. Music provided by Luminous, Veloa, and Sax Squatch. Much love. See you later.